Well, hello folks, I'm L.A. Little and this is your daily NeoTA wrap. When we take a look at these markets, we do it from a neoclassical perspective. Each time we ask ourselves one question: what happened today? What might it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. And if you haven't subscribed, you might want to. You just hit the subscribe button up there on the YouTube, and anytime content is pushed, you'll be notified, which is a great way to stay up to date. As far as these markets and what happened today, well, it was a down day today. We had a fairly decent drop to start the day. And if you were not aware, it was actually Fed day today, and that is that we had the Federal Reserve minute notes come out today to tell us what the Fed was thinking. And those notes were seen as more bearish, more dovish than expected. But nevertheless, we got a sell-off, right? We got down 1% pretty much across the board. This was actually down about 1%. The Russell, they've got the wrong numbers up here. Gold spikes up almost 15 bucks today. You had silver up. You had a flight to safety basically. Bonds, gold, and silver, and you had money running away from the dollar and running away from stocks again. Now, the real question is, does it mean anything? Because for so long, we haven't seen this market willing to drop. We did get like I said, an early drop today. Then we came up into the minutes. The market was moving higher. Then it squeezed higher, and then it finally fell at the end again. Last night I was talking about the weakness across the globe. And I put that into an article, put it up on Market Watch today. They printed it for us. And here's the range that we're in on the S&P 500. And I just thought this would be a nice way to just show you. All ordinaries, new lows, 11% loss for the year so far. The Bovespa, this is down in Brazil. It's already 20% loss. The Taiwan markets, 18%. It was down another 1.5% or so today. You go to Singapore. Singapore down 14% and counting. You go even to Hong Kong, and it was 8%. It's down more again last night. The SSEC, which is the Shanghai index, 34% top to bottom on that first drop. Was trying to roll over again last night, but it looks like the government came in and bought at the end of the day. And then if you go over to Germany, you've already had a 14% correction, and tonight they start to break down as well. So around the globe, the story is pretty much the same. The only place it isn't is good old US of A, still hanging at the top. But are we? I want to show you 3 charts that maybe calls that thesis into question a little bit. So we're just talking about, the S&P hanging up here at the highs within 2% of the all-time high, still in this 90 point range. And it remains there. Even after today, really no change, right? That's the S&P. Now, switch over to the Dow. In the Dow, it's a different story, right? Now, I realize this is only 30 stocks, but up until recently, it had held that same range in terms of the consistency. But what has it done? It's broken down, right? Broke down here, 2 bars back, broke on multiple time frames, and it's getting the extension to the downside. What's it doing? It's going for these lows down here. Those same lows, if you pull that S&P chart back up, those same lows are in the same places, right? It's the same picture. It's just that the Dow is leading to the downside. Now, fast forward to the Russell. What's the Russell doing? Again, it's the same overlay. I don't change the lines. They all look the same. What is it doing? It's coming down for these lows. The only difference here is that on the Russell, you actually need to take this bar and move it down a little bit, right? Because it's actually a little bit farther down. It's the same story, and it tells you that this market is trying to find its way lower. It's doing it on the Russell, it's doing it on the Dow. More than likely, we're going to see it do it on the S&P, do it on the NASDAQ, do it on the NDX. So this market is not immune to what's happening around the world. In fact, this market is starting to give you signs but in fact it is starting to lose its grip too. It's like a boxer, right? It's almost like the manager is ready to throw in the towel at any point, right? Because his boxer keeps taking body blows, and this market keeps taking body blows, and though it's held so far, it wants to break down. All right, let's look at the internals here, see if there's anything else we can glean from this. So if we pull up the daily here on the S&P 500, you know, what we did today was really no serious damage. The only thing that we really did is we got back into this bar. That's probably the most negative thing out here. You're holding here at all these little, you know, lows over the past 2 weeks. Hasn't given it up yet. You got a swing point low down here, and this bar itself is a swing point low as well. You break these, then of course it would look like that picture we just saw on the weekly with respect to the Russell and the Dow Jones. If we look at the NASDAQ, all right, the NASDAQ today, that one actually did the same sort of thing. It's back into the big bar as well, and so it's holding inside there, a little bit of volume expansion. Gets under a swing point low, so the NASDAQ is going to go to a bearish transition tonight. It finally breaks, and what I'm talking about is this swing point low here. So you got a break on the NASDAQ. Now a lot of times, you know, you'll get a bounce right after the initial break, but this is finally a break here that's going to take this down to a bearish trend transition, because the last time it had one was sideways. If you look at the NDX, right, the NDX, same sort of setup, hasn't quite broken that low. 4506.19, it closes just over at 4510, so tomorrow it will be trying to break as well. And then the Russell we saw on the weekly, here's the daily. Russell's down underneath the swing point low, breaks again. That's the third break already. Actually that's not quite true, it actually broke it right here, so it's already got the break. So the Russell again trying to come back down. It's inside that big bar too, where the low is about 1189, and we closed here at 1202, so you're about 10-11 points away from the lows. That's the indexes domestically. But if you look internationally, and it wouldn't be complete without doing so, given that all these markets are tied together, swing point low here on the French market breaks, right? So you get a trend transition back to sideways on this market. So that run all the way to the highs has transitioned back the other way. I don't look at London much because it travels with the metals more than anything else, but they're making new lows already. If I look at the DAX is on the ropes, trying to make new lows, coming down there with almost as much volume, and it looks to test those lows tomorrow. And I'll quickly show you one more thing. We talked about Hong Kong last night. You know, Hong Kong is coming into the lows. It's trying to make it to the lows. And the large cap 8 shares, if you want to know, did the government buy yesterday at the close when the market was down about 5-6% on the Shanghai? New lows. It takes them out. 10,710 was the low. You're at 10,642. I think this market is telling you what's really happening in China, and that the fact that China held, and I'll show you that chart, is really about the Chinese government coming in and buying the stocks at the end of the day. A quick note here on the gold market as well. We had a nice big push in the gold market today. You got the ABCD structure going now. So pushes up, right? That's your ABCD structure now. That points back to a retest regen off this swing point low. That's the target at this point. And finally, the oil market. So I had some questions relating to an article that I wrote about the oil market, and I'll get to that in just a second. But if we look at the USO tonight, USO pushes down, volume expands, just like we saw back here. And I'll show you here in a second the article that I wanted to talk about in the question. Back here when it broke, it was different because you had just broken swing point lows, right? You had the volume expansion, you blew out stops basically. Then it gets a little bit of a rally, but then it's just this long decline. Well, now you're at the end of a long decline, right? Volume expands, same sort of thing. You're going to get a blow-off type low here, and then some sort of a bounce out of that most likely. That's the oil market. So let's go to the article now and the question. The viewer question had to do with this chart that I had in this article, and you can get this article on the front page, Energy Stocks for Trade, Still Not an Investment. And I was talking about the divergences that are forming just like they formed before. If we looked at them before, back in the December through February period, you had about a 3-4 month period where oil kept plunging and the stocks themselves started making higher lows. And it took them about 3 months to play this out. But after the end of that, right, you got a huge rally off of it, and in this XLE itself, you got some decent rallies in between. Look over at the USO, look at WTI, whatever you want to look at, you had the same thing. You make a nice rally, you come back down, you set a new low, yet you make a higher low here. That leads to a big rally in the oil market and the XLE. Fast forward to today, the question is okay, is the XLE going to make it 272, which you talked about in the article? And here's what the XLE looks like tonight. And I'll show you a chart here in a second, but what I essentially drew in the chart was I drew in this and said, hey, this thing can make it up into this swing point low, which is around 72. If this triggers, right, if it gets over this, it creates the ABCD structure. And actually, the problem is I didn't say if it triggers. I acted as if it already triggered, and kind of in the wording, I probably didn't word it as well as I should have. I said this has the markings of a bullish ABCD structure. I should have said this has the markings of a bullish ABCD structure, and if it gets over this B point, right? But it didn't get over it. It fell back today. And so if we look at it, the fallback comes on so-so volume. You're coming back into some high volumes. This still could hold. And matter of fact, if you scroll down a little bit farther in the article, it talks about the scenario that has to set up. You get an initial bounce in the XLE. Well, that is what was taking place here, followed by a subsequent drop. Well, that's what you're getting now. What's the key? It needs to make a higher low, right? It needs to make a higher low. That's the key. So if you look at this now, the question is will this make a higher low? Because clearly USO is not going to make a higher low. And so we'll have to see if it does that. If it does, then this trade as described here in the article will get a little bit more meat on its bones. If not, well, then it's going to take longer for this to develop, and this is going to be a false positive in that it was setting up properly. Right now, still looks like the trade could set up just as described, so we'll just have to wait and see if it does it, right? And if you're trading it, you can put in buys on a test, right, that holds. And that's where the test is going to be, and that's what the scenario looks like if you want to follow it. Okay, as for tomorrow, what are we going to do? Well, it looks to me like this market's going to still be under pressure. If you look at the financials today, they sold off, right? They're coming back into this bar. They did hold, so they may get their bounce, but that looks kind of weak. You're starting to get a little more deterioration elsewhere, like here's the durables. Durables are coming back, testing a swing point low, and they have volume. The semiconductors seem to have no chance of finding a bottom. They just keep drifting lower and lower on all time frames. And so those indexes that we looked at, right, the swing point low breaks, the breakdown in the rest of the world, right, it looks to me like it's starting to weigh here, and we're probably going to see more pressure over the next session or two. That's it for tonight. Thanks for joining me. Have a great one. Take care, and I'll see you next time.